Welcome to yet another conversation in our investment series, Inside the Investor's Mind. Today we are privileged to have Ms. Caroline Wamanga, a financial analyst with Inua Capital. She'll be telling us about Inua Capital. She'll be telling us about what they do, what are some of the things they consider before investing in your business. And if you happen to qualify, how can you access investment from Inua Capital? And if you do not yet qualify, what do you need to do to qualify for an investment from Inua Capital? If you haven't yet liked, subscribed to our channel, we would like to interest you to pause right now and click that subscribe button and click like to this video, and also share this video with another business person who needs investment in their business or who needs to understand what they need to do before they can get invested into their business. Caroline, you're welcome.
Thank you so much.
Who is Caroline?
So, Caroline is a former banker,
Okay.
who left banking mostly because I figured out after 5 years it wasn't the career for me.
Right.
So I was looking for something more interesting, more invigorating, more challenging.
Right.
So I turned to private equity, did a couple of internships, and I landed at Inua Capital, and since then I've been immersing myself in this industry and building my career.
Wow. And what's Inua Capital?
So the vision and the dream of Inua Capital was to invest in the missing middle.
Okay.
So if I can briefly describe what the missing middle is, these are businesses that have gotten too big for a microfinance to fund and are probably too informal for a commercial bank to fund.
Right.
So you find their financing needs are ranging from $100,000 to like $1.5 million. So they find themselves in that space where they're having challenges accessing finance. Other challenges, something else that might be exacerbating this challenge of access to finance, probably apart from the informality, is the lack of collateral.
Okay.
Yes. So we are looking at SMEs or the missing middle, and that are best in class, and we're looking to invest. Our ticket sizes are ranging from $100,000 to $500,000 with a possibility to follow on investment of up to $1 million.
Right.
We provide very patient capital that's ranging from 5 to 7 years, right? So of course, evidently we have to exit the business at one point so we can return money back to our shareholders.
Right.
Yes. So apart from that, our mandate, apart from getting very good commercially viable businesses, apart from our target of getting a return, we also want to do good, or do what I would call well. So what that means, we also have we also invest with a lens of ESG principles in our whole investment process, in our whole investment ethos. So what that means, the types of businesses we are looking at, number one, are not on the IFC exclusion list. I'll talk about businesses that are doing, let me say, emissions or anything of illegality, let me say industries like prostitution and the like, all right? Then we, apart from, like I said, getting returns, we're looking for businesses that, number one, they are forwarding or promoting corporate governance, environmental sustainability, and also social impact or social justice. So those are types of, that's what our mandate looks like.
All right, thank you. So In your tenure of helping businesses, what do you think is the biggest thing or biggest reason that makes a business not to be investable?
So I cannot, right now to mind, they can't come. There is no one over the other, or for me, there is no like number one.
Right.
So it can be like a combination
Okay.
of factors.
We can talk about the combination of factors.
Can be a combination of factors. So remember, at Inua, we invest in the entrepreneur apart from investing in the business.
You invest in the entrepreneur,
Yes.
not just in the business.
Yes.
Is that a character thing?
It's ideally I wouldn't call it that. You can be the nicest person on the planet, but you will find that I will assess or find I do not believe that probably you believe in your business, or I don't believe you're the person who can actually do the execution you claim you want to do.
Okay.
So I'm investing in the entrepreneur because if you look at the types of structures we do,
Right.
we provide a very flexible range of structures, from equity, straight equity to equity-like instruments.
Right. You
So-
can take us through the different
Yes.
structures. Yeah.
I can't say all of them. There are so I'll just quickly talk about equity.
Right.
Equity, I'm buying shares into your company.
Right.
I'm buying shares into your company. So you will find, what we do only minority stake.
Okay.
Because I want you to have equal stake into it. I want you to have bigger stake into your business. I'm not going to take the biggest stake, and then you can end up leaving me with the burden of making sure that the thing succeeds. So
Right.
we take minority stake. We want the entrepreneur to have the bigger stake in the company, right? So that our goals are aligned. Our goals are aligned for the success of the business. So we invest in the entrepreneur. Let me say, apart from your character mattering, what is your vision? We are investing in your vision, not in Inua's vision.
Okay.
Inua already has its vision in place, but we are investing in the vision you have for your business.
Right.
So if you do not believe it, I do not believe it. It's not going to work out. You
Right.
understand? So other things, then I think part of the obvious is and another thing probably I can add on to character. I think there are some character flaws you find in some entrepreneurs. If we find that you have, let me say, a loose relationship with the truth,
Okay.
like if we start sensing like deception. This is a marriage, remember?
Okay.
It's going to be a long-term relationship, 5 years and 7 years, like stretching 7 years is a long time to be in the same bed with someone. So if the relationship is not established on a foundation of truth,
Right.
probably if we start sensing a pattern like that, that you're not telling the truth, then things will probably not work out.
Right.
Because what else are you hiding? Like if I've now already invested money in you, what else are you hiding? What else can go wrong? You understand? So this is a marriage. We call it a marriage, a partnership.
Okay.
So we prefer it be established on a foundation of truth.
Right.
Then other things I would say I've noticed this with entrepreneurs, and I think it's just a function of, when an entrepreneur is in the process of looking for money,
Yeah.
they are highly stressed and they are trying to get this financing under whatever conditions or whatever terms they are willing to get it. So I've noticed this thing whereby they end up changing the original ethos, so the original vision of their
Mission
business.
drift.
Yes, to suit what they think the funders want to hear.
Right.
So that throws it a bit of, because if you go into questioning them further, you really see that they have a misalignment with whatever they are selling or whatever they think you want to hear.
Right.
Yes. Then another thing is, most of the time I find that you probably don't need that much money that you're looking for,
Okay.
or you actually don't need money like you previously pointed out in our conversation,
Right.
sometimes you actually don't need money, or you need less money than you're actually asking for. So that's also another thing that can end up like taking you out of the running. Yes.
Right. Thank you. You talked about some entrepreneurs or the business owners coming to you to look for money at a very critical point when they are very stressed. When do you think is the best time for an entrepreneur to look for money?
I think for me personally, I think the best time would be when you don't need money, or when I come looking for you and you don't need money.
Okay.
Because that gives you a bit of power, number one, a bit of bargaining power, and it gives you enough time to think rationally.
Right.
Because your judgment is not being clouded by the urgent needs that are overtaking you.
Right.
To give you enough time to think rationally, make decisions that will benefit the business. So I think that's actually the best time for an entrepreneur to start looking for money, not at that point when they need it.
Right, and I think that's where technical assistance comes in, capacity development or the building comes in, that the entrepreneur gets to understand their financial dashboard. This is the example that I usually use, that when you're driving a car, there is a dashboard. There's one for fuel, there's one for the speedometer to tell you how the revolutions. There's one for the speed, there's one for the revolutions, like how fast the engine is running. There's one for temperature, so that every business owner should understand how much runway they have. That the money I have in the account, if I didn't run any business now, it should be able to take me X number of months before needing any other capital in. And that I should look for money maybe when I have either 6 months of runway or 1 year of runway, that I don't, it's not so sudden on me that all of a sudden I need money right now.
Oh, I can give another example. Say you are in an incubation center, things are going pretty well, you're really scaling your business, your revenues have grown. I'm thinking that the whole purpose of an incubation center is, the keyword is incubate.
Right.
So I'm thinking with time, the management of the incubation will be like, okay, I think it's time for you to move. I think ideally, apart from taking advantage of those resources that are available, like the utilities and the whatnot, that have allowed you to basically skate on the margins and whatnot. Remember, when you move into your own facility, all that goes away, all that cushion goes away. I think ideally, if you have the resources, or you can start looking for the resources, that I know this is not going to last forever. Can I start planning? Can I start setting up a fund, like separate money, like saving from the earnings, from the profits of the business, putting away money for capex, that eventually I'm going to have to purchase land, I'm going to have to set up a factory, because this can't last forever. Probably the capacity you bring to overwhelm the incubation center. So or you start looking for funders pretty early, like in the next 2 to 3 years, or the next 1 to 2 to 3 years. I think this is what I would start, so that you don't have that urgency of they are chasing us out within the next 8 months.
Yes.
We need to find a place to go. Either, let me say, now you first need to find a place to rent. That's an extra expense, because you carry your cushion of the utilities and whatnot. But then you're still having to spend money to buy land, set up the factory, and all that. So I think, like you've mentioned, some strategic planning.
Yes.
Yeah, looking at your financial dashboard, I'm like, okay, what are my plans for the future? And what are the resources I need to gather that are going to help me achieve this, or keep the business alive and sustainable.
Right, thank you. And at TBN, one of the things that we do for entrepreneurs is scenario planning. We start from the worst case scenario, the middle case scenario, and then the best scenario. Because businesses will always have a combination of the three at any one point, or rather during the stage of the survival or the life of the business. And it's something that we always tell entrepreneurs, that it's always good to sit down and paint the picture of the different scenarios that you operate in. But in addition to that, you use that to form a growth plan. That the growth plan that you have guides the amount of money that you need at any one particular point in time. You're able to project, and then you don't have to run around looking for the money, but you plan when to go and look for the money. So here, I think what Caroline of Inua Capital is telling us is entrepreneurs, do not look for money when you need it. Plan when you need. Plan, anticipate when you need the money, and then approach either Inua Capital or approach us to help you look for the funding that you need. Because if you come at a critical point, in most cases, many investors take advantage of you.
And additionally to that, you have to realize when it comes to private equity,
right?
Like I said, it's a marriage. That time, from the time we first meet to the time when you actually get the disbursement,
yes,
you'll find minimum time is 6 months.
Turnaround time is around
6 months.
Yes.
And you're going through different phases. Like I'll talk about the investment process. 6 months minimum, then it can stretch up to a year. 9 months or as far as a year. So I'll talk about the investment process. So from first meeting when we managed to get into contact with the business from the first meeting. Then we have what we call a screening committee. Basically, I come up with a one-pager, just highlighting what are the highlights about this business. Why do I like it? Why do I think it will be a good deal for Inua? And what are the points? Where are the risks? Is this something that Inua would be interested in? So us as the investment professionals, we sit down round table, the whole team, we discuss these businesses in what we call a screening committee. So it's an open floor. We break the business apart and see, okay, is this something we like? Or put it up to a vote. Is this something we think can aligns with Inua's mandate? Yes, then from that, there's another process, site visits and the like, and then also site visits where the whole team or part of the team, the managing partner gets to. We get to actually go and see the business. Does the business actually exist? They say they are channeling this amount of money. Is that inventory? When you look at the place, does it look like that type of inventory comes out? Then we have discussions with entrepreneurs. Do we like each other? We go to meet each other. Do we actually like each other? Yeah, like you never know. I said like it's a marriage. Right? Do you like us? Do you like us? You might not like us. You understand? So it's
well, they might like you because they need the money.
So it's relationship building, in other words. It's relationship building. You're like, okay, fine. Are we confident in the information we have gathered? So we go to the second stage, which is writing a first investment memo. This investment memo, it's around 30 pages. Then you build it's around 30 pages. We're building also a model, a financial model about your business. And we present this to our investment committee, who of course are busy people and they sit around the world. So you have to gather that team online, and we give them time to read that 30-page or so memo. They come back with their feedback. Their fiduciary duty is to protect the money of Inua and make sure that we are making the best decisions for that fund. So in their different capacities as very successful entrepreneurs who have led VCs and private equity in funds. So they sit down, they give them an opportunity to read the memos, deliberate the business, give us feedback. So they're the ones who give us feedback on, is it a yes? Is it a yes with reservations? Is this something the business needs to go back and fix before they're comfortable? Or is it a resounding no? So you have to communicate all this feedback back to the entrepreneur. So if they do give a yes, we go into a process it's called due diligence. We are verifying all the information that you have given us. We are doing discovery, right? So we're doing discovery in different buckets, all the way from legal, commercial, ESG and the like. So we are doing verification of the information you've given us. We are trying to assess the risks of business. What are the opportunities there, right? So you can see I'm describing very processes that actually take a bit of time, 2 to 3 months, 2 to 3 months or 2 to 4 months, depending on the capacity that is available at Inua Capital. So after this, again, we come up with 2 memos, all right? Come up with 2 memos. Apart from the due diligence report, we are also coming up with a second memo. Again, we build another model based on the information that we verified. You might find that the model is actually not changing much with the first model we presented. So again, we call that committee again, and then we present this information again to them. It is a yes. Then at that point, they're giving us permission to go into the legal process where we offer you a deal.
Okay.
In a term sheet, like very, it's not legally binding, but it's just a summary of the terms and conditions, the type of deal, the structure, offering you. Are you okay with it? Is this something we need to negotiate? You need to change this, you need to change that. If you're okay with that, that gives us like, it's just a green light for actually starting the legal process. Then we get lawyers on board. Because what we're trying to do, we're trying to build capacity in the ecosystem, like for different services when it comes to consultants. So you find in different things, let me say like in DD, there are certain things either we don't have the breadth when it comes to capacity in the team, or we don't have the technical know-how, but it still has to get done.
Yes.
We'll get consultants. So because a consultant has done well the first time, we're not going, but no matter how comfortable we are with the person's work, we have to look for someone else, because we want the ecosystem to be built. Oh, yes. Wow. So we give opportunity, as scary and as risky as that is.
Okay.
Yes, you give opportunities to other consultants, right? Okay. So last time, if you used a different financial consultant or a different audit firm, you look for another one. You take the risk, look for another one, give them exposure to private equity, how it works.
Okay.
Yes. Then we're also doing the same in legal. We're also doing the same in the legal process. We get another legal firm. The entrepreneur also gets their own legal firm to help them. Then documents are drawn up, first draft comes out, and then the back and forth starts until we settle on legal documents that both us and the entrepreneur are comfortable with. Signing happens, and then disbursement happens. So it's a very long and very intense process. So at minimum, it will take 6 months, and at max, it can take a year. So imagine you come to me in Jan and you need money in Feb. You understand?
Right.
You need money in Feb. So also part of our sourcing strategy.
Yes.
We approach entrepreneurs ourselves.
Oh, okay.
That actually, if you check some of the businesses we invested in, we were walk-ins. We walked in, we approached the entrepreneur ourselves. This is what we do, because most of them don't know what private equity is.
Okay.
Yes, so this is what we do. I like your company because this and this. I use your product at home. So because we're looking for locally domiciled business, we're investing in businesses that are set up in Uganda.
Okay.
We are focusing on what is it we are using in the houses, what are products we like using, what brand are you seeing in the market?
Okay.
That is best in class. That is best in class. Okay, you walk into a supermarket, and unfortunately, most of the time when you walk into a supermarket, you're finding Kenyan brands. But if you find a good Ugandan brand, you just scan packaging, call the number, or go to the factory, say, I want to speak to the MD. So it's most of us who do the
deal sourcing.
Yeah. We're the ones who do the deal sourcing most of the time, because we're looking for best-in-class companies that are doing the best with the resources they have. They're punching above their weight. The products we like using, the services we like using, those are the companies we approach.
Wow, thank you. You've used the word private equity a lot, and I think we would like to talk about that. What are some of the different instruments that are available? Is private equity the only instrument that you have currently, or do you have other instruments? And what is private equity anyway?
So private equity, I think the best way I can explain it is if I contrast it with the public market. So what I'll call public equity for me. Okay. So look at the stock exchange. That is public equity, whereby you offer everyone in Uganda, let me say, the Uganda Stock Exchange, when you do your IPO, you're offering everyone an opportunity to buy shares, right? That is public. But when you come to private, it's a select number of entities or companies that you're offering to do a deal with. This is not open to everyone. These are two entities that meet, want to make a deal. One, let me say, the investor wants to buy shares into the company. That's how best I can explain it. But we go a bit further. The beauty with private equity, it's not only straight equity that you buy, only shares. Let me say, there are so many instruments. Some will talk about those. There's so many instruments that can be offered. Let me say, in a frontier market like Uganda, I think it's advisable to be a bit flexible and innovative in the instruments you offer, considering the environment in which we are operating. Remember, I talked about the informality of the businesses, all right? This is just the structure of the SMEs, how they are set up. So we are very flexible as you know. So we're offering straight equity, whereby equity into your company, down to what I'll call equity-like instruments. So there are so many. There are so many. So I'll just speak to a few. Have you had a preference shares? Let me say we're in this situation, an entrepreneur is like, I don't want you to own a part of my business. I want your money, but I'm not comfortable with you owning part of my business.
Okay, because that is what is publicly known.
Yes.
That as a private equity is assuming I have a business and I need investment from Inua Capital, I come to you and you tell me, Derek, if I'm to invest in your business, I like your business, I like what you do, and I think I need to give you money that you need for your business. But I need 10% stake shareholding. I need 20% shareholding. But I don't want to give you shareholding in my business.
Exactly.
I want to retain my 100% shareholding.
I want to retain control of my business.
So
yes. So I still want to invest in your business. So that's why these other structures come into play.
Let's talk about that other structures that come into play.
So other structures that come into play, let's say I've talked about preference shares. So like, okay, fine, you don't want. I don't. Or sometimes you even fail to agree on valuation.
Okay.
You're saying my business is valued at $2 billion. I'm like, no, your business cannot be $2 billion in this economy. I do not believe that. So we fail to agree. Okay. We're like, okay, what is a middle ground we can come to, right? You're not interested in a loan, okay? You're not interested in a mezzanine loan, I'll speak about that. So we can do pref shares, let me say as an example. Pref shares, if you read about them, they have both the characteristics of equity and a loan. Okay. So I can say, okay, fine, I'm giving you pref shares, okay? With let me say a premium of like 15%. A premium of 15%, which I would say is like an interest. And then further I can say it's convertible. What that would mean that, let me say after like 3 or 4 years, 3 or 4 years, let me say if condition 1, 2, 3 happen, I can convert them to equity shares. Okay. You understand? Or I can, let me say, I said cumulative. If you fail to pay my premium, let me say you fail to pay my premium, which is 15%, which I mean 15% of the outstanding pref shares you have. Okay. Let me say 15% of 100,000 is 15,000. If you fail to pay my annual premium, it's cumulative. You can leave it for this year. Your cash flows are not working out, something has happened. Something has happened in the economy, you fail to come up with that money, it's cumulative. So meaning you just extend the payment. Okay, you pay it to me in the second year, or you pay it to me in the third year. Right. Or it's non-cumulative. Of course we need to do that. Non-cumulative would mean if you fail to pay that 15K this year, it's gone. Like I will never receive it. I just have to look forward to the following year, and hopefully, all conditions remain equal. So there are so many different ways these structures can be, can be made. So being in this current type of market, that flexibility is required in order to be able basically to come to a middle ground and actually invest in companies.
Companies.
Yes.
Okay. I think we've used a lot of technical language. We need to break it down a little bit.
Correct.
Because most of the business people the technical languages, technical words just fly
Right.
by their ears and the like. Let's put an example
Right.
of a business that you have invested in that approached you. One business that did not qualify and one business that qualified.
Okay.
You might not give the exact big figures, but you could use an example to explain that business X, we had preferential shares, and the business Y, we took equity. They allowed us to take shareholding in the business, and this is how it went. And the business X, Y, and Z was good and what, but it didn't because of this.
Okay, what I would say, the structures we come up with for the different investments we make are on a case-by-case basis.
Okay.
So I will explain. Let me say there's business A, right? They have a very good product. They have very good revenues. Let me say that are upwards of $1 million annually. Okay. So
just pause a little bit. So are we now talking about the qualifications? What makes a business to qualify? Because we talked about what makes a business not to be investable in, the character of the owner of the business.
Yes, I'm going to merge all that.
You're going to merge
then
all
I'll
that.
come to the structure
Then
that,
you come
as
to
me, Caroline, I would end up like offering when I'm writing out the deal.
All right.
So business has very good revenues. It's making upwards of $1 million.
Okay.
Yeah. Remember, ideally in our criteria, we're looking for business making at least $300,000 and above annual revenue.
Okay.
So this business has more than met our criteria, right? Its business model basically has been figured out, all right? It's on a path to scaling. It's on a path to scaling. It's not really like a very early stage business, and it has some sort of a business formality. They have kind of de-risked their business by formalizing it. Okay. For me, at that point, that business is looking very mature. So me, as the investor, I say, okay, fine. I want 35% stake in that business. Okay. Because it's a good deal.
I'm making 300K revenue a year.
Yes.
And
I'm very informal. I'm having issues with URA already.
Yes.
And my business model is not very figured out. I am trying to figure these things out. But we see a value proposition in your business. Okay. When it comes to risk assessment and the return probability, at that point, I think a less risky structure for me to offer you would probably be something that has more the lookings over a loan. Let me say a mezzanine loan. Okay. So let me tell you
that's another term.
Yes. So let me explain it. So the mezzanine loan, let me say, would look like this. Say I give you 100,000. I give you a grace period of 2 or 3 years, where you're not going to pay me the principal. Okay? Let's start collecting after we after we have executed the growth plan you had in place and the de-risking and all. You start paying the principal in, let me say, it's a 5-year term loan. I've given you 3-year grace period. You start paying me because I expect that we have done a lot of value creation in these 3 years. Remember, we had a plan in place, your plan in place that we've added on, right? And another thing I think I've not mentioned is that private equity is supposed to be hands-on investing when it comes to strategic and also the operational bit. Okay. Based on the kind of environment we are dealing in, it's very hands-on. I just will give you money and I walk away. All right? It's very hands-on. All right? So I expect that us together as a team, Inua and the entrepreneur, are doing a lot of value creation and executing the growth plan that we both agreed on at the beginning. Okay. So these 3 years, ideally, we should be doing profit maximization and expanding the revenues. Okay. So I'd expect in my model, the model that we came up with, the financial models, that these numbers should come close to or even exceed, all conditions being equal, should exceed what we have forecasted. So I'm like, okay, fine. In the last 2 years, that's when you start paying off the principal. I would say let's do 50K in the 4th year, and you pay off the other 50K in the 5th year. And then I'm like, okay, fine, I put an interest on it, right? I put an interest on it. Let me say you'll be paying me in 15% each year on the outstanding. So the first year you're paying me 15,000, second year 15,000, third year 15,000. Imagine 15,000 those 3 years. Then the outstanding. So we've removed 50K at the end of the 4th year. So you made left with 50K. So the following year, the interest you will pay me will be on the 50K that's left as a balance. So are you seeing the flexibility of it? You're basing on the cash flows that you have projected that ideally could happen in this business based on the growth plan in place, how you forecasted the revenues, the cash flows, and all that. So we try to be, like I mentioned, flexible as possible. I hope that has helped, like kind of like paint a picture.
Yes,
yeah.
It has.
Yes.
Criteria number 1 is you must be turning over.
On average, ideally, our sweet spot would be $300,000 in revenue. Yes.
So whichever industry that you're in, or you have
there's some businesses where we make exceptions. You can be making $100,000 and you see we cannot leave this business. Like, this is something I think we can do.
Must it be a specific industry?
No, we are sector agnostic.
Okay.
Because we're trying to reflect what's happening in the Ugandan economy.
Right.
We're sector agnostic. So we are particularly looking for businesses that are our mandate basically is investing in businesses that are doing import substitution.
Okay.
All right. Trying to support players in the supply chain, the local supply chain.
Okay.
All right. Then also people who are doing manufacturing.
Okay.
Yeah, businesses that are doing manufacturing. That's our sweet spot, the area we like to play in.
Yeah, basically Uganda imports a lot of goods from across the world.
Exactly.
So you would like to support, or rather you're looking to support businesses that are manufacturing what would have been imported into the country. So this could be across any industry.
Any industry.
In Uganda.
Yes.
And these businesses must be making on average between $100,000 to $300,000
at minimum.
At minimum. And they must be registered formally.
Of course, they must be registered. It should be
with the Uganda Registration Service Bureau.
Yes.
And they must be paying tax.
Yes.
So they must have a tax compliance certificate.
Yes.
They must be bankable, meaning they run a bank account.
Yes. Otherwise, how would I be able to do my verifications of your balance?
Someone can say, I have money.
Yeah,
I keep cash in.
And that's actually a really common thing. I read I think it was an IFC report, where it was saying there's a good 20% of SMEs that actually they have their bank accounts, they don't use them. They have their bank accounts, they don't use them. So the question is, are they actually keeping their money?
But that could be the question.
Or they are misusing their accounts.
Right.
Yes.
Okay, so we're still looking at the criteria. If you were to approach Inua Capital, they are private equity capital providers, meaning that when you go to Inua Capital, it's not like a bank where you are looking for debt in the form of a loan and you have collateral. Do you take collateral?
It depends on which structure we are deploying.
Okay.
Yeah, it depends on which structure we are.
Do you give debt or do you only give private equity? You must have stake in the business.
Not ideally, like I've mentioned, structures are diverse.
Right.
Structures are diverse. It will be on a case by case. basis.
Okay.
Yeah, and it's also our job to, that's why we bring in legal counsel. We make sure the entrepreneur has to have their own lawyer.
Okay.
Because, and also in our legal documents, actually, the entrepreneur's lawyer has to sign. Number one, they should be someone who's allowed to practice in Uganda, has understood that document and explain to the entrepreneur what all this means. We can have several meetings with the entrepreneur during that whole process, where we break it down to the simplest terms. This is what this deal means. This is what this deal translates to when it comes to money. Right? This is what. So the whole thing is education. Education. You can't have someone signing something where they say, "I didn't understand." So that's why they have their own legal representation.
Right.
They have access to us throughout the whole process, so we can just basically educate them, because we understand this is not the most, let me say, developed industry in Uganda. It's a very nascent industry. So people are learning, and we're also teaching. Yeah, just teaching about this industry.
Right.
Yes.
Thank you. And for businesses that are beyond the money, if I need the money, do you also offer technical assistance to the businesses?
Yes. So,
and what does the technical assistance look like?
So when it comes to technical assistance, it's on a case-by-case basis.
Okay.
What is this business's challenges where there is heightened risk will definitely not be the same situation that another business is facing. So that's how we have that whole process of due diligence. Each business, by the way, is unique on its own. Okay. There are some recurring themes. There are some commonalities among all businesses.
Right.
But each business will give it an opportunity, like a risk assessment, and getting to learn the business, and we plot out the risks of the business. So that informs the type of technical assistance that is going to come in. So we have our partners, our shareholders have provided us TA, technical assistance that we make use of in the businesses we invest in. So we have something we call a 90-day plan, and we have something called a 5-year ESG action plan. Remember, we are an ESG fund.
Right.
So our discovery from the due diligence process informs these plans.
Okay.
So in the first 90 days in the business, what are the most urgent things we need to de-risk?
Okay.
To de-risk in the business. So let me say, for example, it might turn out that there is literally no financial resource on ground that we have assessed, and the entrepreneur also knows most. The entrepreneurs actually are very aware most of the time what is going on in their business.
Okay.
So you come in with practical help. It's like, yeah, I know my accountant is not really up to par, right? They are not up to par. I'm not getting the right information out of the numbers from the finance department. So at that point, let me say, as Inua, I would say in the first 90 day, in the 90 day plan, finance is very critical because there are different buckets. Like I mentioned, there will be finance, there will probably be HR, there will probably be operations, things that you see are urgent to fix. So at that point, you hire a financial, we would put in, let me say, into play a financial overhaul plan. So of course that resource on ground is not the one to do it because they are not up to par. So a financial overhaul plan, of course, a financial resource or consultant would have to come in and fix it. All right, fix it. They will be paid from that TA resource, right? For a period of time. Let me say those 3 months. Because the plan has to be done within 3 months.
Right.
So for those 3 months, they are fixing whatever is wrong with the business. Do we need to redo your finances into your QuickBooks for the past 3 years so that we can get the right numbers? All right. That's what a financial resource would do, right? Okay. Do you need to do a tax assessment and figure out which taxes you're actually supposed to be paying, how they're supposed to be reflected in your financial statements? That financial resource will be doing that at opposed to that TA facility. Say the HR the HR function is non-existent in your company or your SME, and you see there's a real risk that ideally, if you come across an entrepreneur who knows the Employment Act very well, and you're not doing right by them, that you might end up in court soon or in a labor court somewhere. So the job would be hire an HR consultant, all right, to fix it. Okay, what do you need in place? This is basically, and also take the opportunity to teach the entrepreneur. They have to buy into the whole process.
Okay.
Yeah, because most of the time you find they're the ones actually playing that role.
Yes.
Number one, it's the HR's job, the HR consultant's job at that point to educate them, come up with policies, put structures in place, put structures in place, and basically leave a well-functioning department and just de-risk that area of the business. Yeah, so that's what it looks like for us.
Okay. So where would these entrepreneurs find you?
So these entrepreneurs can find us if they just type in Inua Capital or just Inua. We shall come up as the first. The search engine will show us the guys who come up first. There are our email addresses. It's in I think it's admin@inua.com. You can send an email. There's also a phone number attached there. You can call the number. If the number doesn't answer, you can send a WhatsApp. But again, I would advise you send an email. You send an email. We shall respond as fast as possible. Or you can get in touch with us if you have partners or if you have connections in the ecosystem. How we shall build private equity in Uganda is basically that ecosystem play. So if you have already partnership with that ecosystem players, you can ask them about that.
In other words, what you're saying is come to TBN and TBN will take you through.
Yeah, TBN will just call Caroline. TBN has Caroline's personal number, her personal email, and shortest time possible I'll be able to get back to you. That's actually, I find that's a shorter route if you're trying to get to us.
All right.
Yeah, that's another short route.
All right, thank you. Are you just in Uganda or?
Yes. So we are only domiciled to operate within Uganda.
Okay.
But one of our anchor shareholder, Takula anchor shareholder, is called IMP, Investors and Partners. So it's a French-based impact fund. So it has been investing in Africa for over 20 years. Wow. For over 20 years. So what they do, this is their play, and Inua is a result of that play, right? They identify a specific domicile, right? That we want to invest, let me say, in Uganda. They identify a local partner, someone who has experience, right? Has the experience, has the networks and the like, and they, together with that person or together with that resource, they set up a fund. So they have been doing this across Africa for the past 20 years.
Wow.
So each fund operates in that specific domicile, right? In that specific domicile. Always play contextually to that place, all right? Play contextually to that place. So they have done this across they have set up funds across West Africa. And I think what the first is set up in an English-speaking country. Yes, I think there are more than 10 funds right now across Africa, all the way from Senegal, Mali, Cote d'Ivoire, Ghana. Then we go as far as, of course, Madagascar. Yes, so Inua is a result of that mandate. Yes, Inua is a result of that mandate. So each fund that you find, Investors and Partners, is an anchor funder or an anchor shareholder or it operates within that specific domicile.
Thank you so much for allowing us to understand how Inua Capital works.
Thank you for
and demystifying private equity in investments in Uganda. And if you have any questions, feel free to write the questions in the comment section. We'll be able to respond to them. And if you haven't subscribed, please like and subscribe and share this with any other business person who is there that needs to hear this for their business. And thank you so much for tuning in, and until next time.